Mastering crypto trading involves a combination of knowledge, skills, and a solid strategy. Here's a detailed guide to help you navigate the world of crypto trading. Educate yourself. Start by understanding the basics of blockchain technology and how cryptocurrencies work. 3. Explore different types of cryptocurrencies, their use cases, and the technology behind them. Getting into cryptocurrency can be an exciting journey, and educating yourself is a crucial first step. 5. Start by familiarizing yourself with the basics. 6. Cryptocurrency is essentially digital or virtual currency that uses cryptography for security. 7. Bitcoin, created in 2009, was the first and remains the most well-known cryptocurrency, but there are thousands of others, commonly referred to as altcoins. 8. To educate yourself, consider exploring reliable online resources, watching beginner-friendly videos, and joining forums or communities where you can ask questions. 9. Cryptocurrency exchanges often provide educational materials, too. 10. As you delve deeper, focus on understanding blockchain technology, the decentralized ledger that underpins most cryptocurrencies. 11. Take it one step at a time, and soon you'll be navigating the world of wallets, exchanges, and maybe even trying your hand at a bit of trading or investing. 12. Remember, the crypto space is always evolving, so staying curious and open to learning will serve you well. For more information on Bitcoin or anything cryptocurrency, please click the link in the description. Market research. 1. Stay informed about market trends, news, and events. 2. Follow reputable sources, join online communities, and engage in discussions to gain insights into the market sentiment. 3. When diving into the exciting world of cryptocurrency, conducting market research is crucial for making informed decisions. Start by exploring the overall market trends. Keep an eye on reputable cryptocurrency news sources, forums, and social media to gauge the sentiment around popular coins and upcoming projects. Understanding the buzz in the community can provide valuable insights into potential investment opportunities. Next, take a deep dive into individual projects. Check out white papers, which are like roadmaps outlining the project's goals and technology. Assess the team behind the cryptocurrency. Experienced and reputable teams often contribute to a project's success. Look into partnerships and collaborations, as they can be indicators of a project's credibility. Finally, analyze the project's use case and technology. Does it solve a real-world problem? Does it bring innovation to the table? Combining these aspects will help you form a well-rounded view before venturing into the cryptocurrency market. Remember, stay curious and always be aware of the risks involved in this dynamic space. Choose a trading strategy. 1. There are various trading strategies like swing trading and long-term investing. One popular approach is day trading, where individuals make multiple trades within a single day, taking advantage of short-term price fluctuations. 3. Day traders closely monitor charts, technical indicators, and market news to make quick decisions. 3. It's an active and fast-paced strategy, requiring discipline and constant attention. 4. On the other hand, a more laid-back strategy is hodling, derived from a misspelled word hold. Hodlers adopt a long-term perspective, investing in cryptocurrencies with the belief that their value will increase over time. 5. This approach requires patience and the ability to weather market volatility. 6. Hodling is often associated with strong belief in the potential of specific cryptocurrencies and a willingness to ride out short-term price swings. 7. Each strategy has its pros and cons, so it's essential to consider your risk tolerance, time commitment, and overall investment goals when choosing the right trading strategy for you in the dynamic world of cryptocurrency. 8. Select a strategy that aligns with your risk tolerance, time commitment, and financial goals. Risk management. 1. Protect your capital by implementing risk management strategies. 2. Managing risks is a bit like navigating through a digital roller coaster ride. If you like this video, please give it a thumbs up, comment, like, and subscribe. Thanks for watching. 3. Picture this: you've strapped into the Bitcoin Express, and as it hurtles through the market twists and turns, you need a sturdy safety harness to ensure you don't get thrown off. That's where risk management comes in. In simple terms, it's like having a strategy to keep your crypto investments from going off the rails. One popular method is diversification, which is a bit like spreading your investment eggs into different digital baskets. Imagine you have Bitcoin, Ethereum, and a sprinkle of altcoins in your crypto portfolio. If one takes a sudden plunge, the others might be on the rise, helping balance out the bumps. Another tool in the risk management toolkit is setting stop-loss orders, which act as emergency brakes. You decide in advance how much loss you're willing to tolerate, and if the value of your crypto drops to that point, the system automatically sells, preventing a financial freefall. So, in the wild world of crypto, it's not just about the thrill, it's about managing the twists and turns to enjoy the ride without losing your digital shirt. Only invest what you can afford to lose. Select reliable exchanges. When diving into the world of cryptocurrency, choosing a reliable exchange is crucial for a smooth and secure experience. Firstly, consider the platform's reputation. Look for user reviews and feedback online, as well as the exchange's history of security incidents. Established exchanges with a track record of reliability are generally safer choices. Check if the platform complies with regulatory standards in your region, adding an extra layer of credibility. Secondly, assess the variety of cryptocurrencies offered and the ease of use. A good exchange should provide a user-friendly interface and support a range of digital assets beyond just Bitcoin. Look for features like two-factor authentication to enhance your account security. Additionally, consider transaction fees. Some exchanges have transparent fee structures, while others may have hidden costs. By carefully weighing these factors, you can choose a cryptocurrency exchange that aligns with your preferences and ensures a secure trading environment. Technical analysis. Learn to analyze price charts, patterns, and indicators. Technical analysis can help you make informed decisions about when to enter or exit a trade. Technical analysis in the world of cryptocurrency involves studying historical price charts and market data to predict future price movements. It's like trying to understand the patterns in the waves of the ocean to anticipate the next big swell. Analysts use various tools and indicators, such as moving averages, relative strength index, RSI, and Bollinger Bands, to identify trends and potential entry or exit points. For example, if a cryptocurrency's price has been consistently rising and hits a level where it historically reversed, traders might see this as a signal to sell. One common principle in technical analysis is the idea that historical price movements tend to repeat themselves. Patterns like head and shoulders or double tops can signal potential trend reversals or continuations. However, it's important to note that technical analysis is not foolproof, and market sentiment and external factors can influence prices unexpectedly. It's like reading the weather forecast. It can give you an idea, but you never know when a sudden storm might hit. Many traders use a combination of technical analysis and other strategies to make informed decisions in the dynamic world of cryptocurrency trading. Fundamental analysis. Understand the fundamentals of the cryptocurrencies you're interested in. Factors like project team, partnerships, and technological advancements can impact long-term value. Keep emotions in check. Emotional decisions can lead to impulsive actions. Develop discipline and stick to your trading plan, even during periods of market volatility. Diversify your portfolio. Avoid putting all your funds into a single asset. Diversifying your portfolio can help mitigate risks and enhance your overall returns. Continuous learning. The crypto market is dynamic and ever-changing. Stay updated on new projects, technological advancements, and regulatory developments to adapt your strategy accordingly. Network and learn from others. Engage with the crypto community, join forums, attend meetups, and learn from experienced traders. Networking can provide valuable insights and perspectives. Practice with a demo account. Many exchanges offer demo accounts where you can practice trading with virtual funds. This allows you to hone your skills and test different strategies without risking real money. Remember, mastering crypto trading is a continuous process. Stay patient, stay informed, and adapt to the evolving nature of the cryptocurrency market. Thanks for watching. If you like this video, please give it a thumbs up, comment, like, and subscribe.